Hi, everyone. Welcome to our market update. My name is Vinnie. This guy will be here.
David Wright. Thank you, everybody. I'm excited to be here on this getting dark and gloomy day.
Yeah, we wanted to start it off with basically the 50-year mortgages. I know David's been really excited about this.
The 15-year mortgage?
The 50-year mortgage.
Oh, my gosh. So this is very interesting. So I actually just locked a 40-year mortgage a little bit ago, which was very interesting. The 50-year mortgage is, to me, there's a lot of interesting ways to look at this. So the first one I would tell you is 50-year mortgage is almost like you signed in a long-term lease agreement, even though you're still able to build equity, but you're only going to pay interest on that loan for the first 30 years. So you're never really docking down the principal on that loan. Now, does it make it affordable for a lot of people? Yes, it does. Is it a great option for you to probably get into the market? It depends on your goals. Do I think it's going to have an impact in the current real estate market? I do. Because what's going to happen is when lenders start actively throwing out this 50-year mortgage, which I'm sure the interest rate's probably going to be 0.5% to 0.75 higher than normal fixed rate mortgages.
Well, isn't it close to 1%, 15%, or 15-year mortgages are like 1% lower than basically 30 years?
Yeah, it's pretty close. I mean, that's a good rule of thumb overall, but it's like you look at like a 30-year fixed rate is like 6.1%, APR 6.125. But the funny thing is the 40-year mortgage I locked in today was on a condo with 20% down, which is not as favorable as other deals, but it's a condo, 20% down, 741 FICO, and it's like they're locking in a 40-year mortgage at 6.75. Not bad. I mean, it's 40-year mortgage. Like the payment itself compared to the regular 30-year payment, it ended up being like $250 less per month. But $250 less per month is, kind of a big deal to a lot of people. But their goal also with this property is only to hold it for 5 years, and then they're going to sell it because they live in LA, and they're going to move from LA. So
I guess something to think about, right? I mean, like
your goals.
If let's say the 200, I mean, it jumps to 400 when you go to 50, right? Hypothetically, right? The saving, we're roughly about, I don't know, about $700 or so is about $100,000 of buying power, maybe 750. So, I mean, at that 400, that's close to about $50,000 of buying power. Now, food for thought. What's that going to happen, right? What's going to happen if you are looking at the bottom number? Are we going to have people adjust to the current market, or is that going to bring more buyers to the market because it's going to get more intrigued, get interested in the property, and then kind of work their way up? I mean, I probably think if we go with the 50-year, and you got to think, I mean, David here, he's giving them insight on 30-year, 40-year, 50-year, probably even 15-year, right? Not all lenders do that, right? The same kind of thing of like adjustables, right? Like, hey, you should buy adjustable, date the rate, marry the house, right? That was like a thing that was pushed out on social media by realtors that didn't know better, and lenders that basically were just trying to get a deal, right? So it's not necessarily about basically having all the information. It's about how people are going to leverage that information, right, to the masses. I think that's kind of food for thought.
It is. I mean, so I did a post earlier, probably like our Monday. I think it was Monday, and it was basically about the 40-year mortgage and what's it going to be and how's it going to be for the market. The reality of it is, this is strictly my opinion, is, buying a home is investment in yourself. Buying a home is ultimately to build wealth and to have like a long-term savings plan. It's a forced savings plan that you're paying into each month. That's eventually building you money. If your mortgage is for 50 years, you're never really paying down the balance. And now you're essentially waiting on the appreciation of the property, which, in Southern California is very good. Like traditionally, your appreciation should be at least 4% per year. Totally biased opinion here. It's like, if that's what you have to do to get into your first house with the 50-year mortgage, I would say do it.
So, okay. I just want you to know, I mean, if people watch this, I've thrown out the idea that was going to be not 50-year. I said 40-year. I'm gonna toot my own horn for a second. I
Yeah,
said that.
do it.
I said it about a year ago. I was like, my thinking, maybe even longer than that we're gonna start pushing 40 years. It's gonna adjust the price a little. People are gonna go, oh wow, okay, now it makes financial sense for me to purchase. I wasn't thinking in 50 years, right? So I got to toot my horn on this, and I'm gonna throw out my next thought right here. This is my next thought right here. That over time we're gonna see basically appreciation on basically detached properties more drastically, right? And attached properties, we're going to have more if it balanced out and slow appreciation. Because what's going to happen, this is my thought, is that we're going to have some more apartment complexes that are going to be converted over to condo complexes, right? Downtown San Diego. Plus, with the rule changes of condos that can actually be sold, or ADUs that can be sold as condos, you're going to have higher density levels that people are going to sell that out, and we're going to have more quote unquote, condos out there. But the land's going to get more expensive. That's my thought of what's going to happen in the next 5 years.
I'm going to tell you, I would 100% agree with you. For anybody that has a car and is not relying on the city of San Diego's future predictions if everyone's going to ride the bus and the trolley, because that won't happen. But for those of you out there who will be driving cars and still do, everywhere you drive around right now, you see there's a lot of condos being constructed and a lot of high-rise condos being constructed. And I'll mention just in my neighborhood in La Jolla, you look around, UTC Mall, giant high-rises being built. Look all over. Just the interesting thing that's even more interesting for those of you out there who are food aficionados, go down to Convoy, little Asian town, and look at all of the high-rise condos being built there. It's absurd. And then if you do another direction to Clairemont 92117, I believe, and you go right around where Genesee and Balboa hit, there's hundreds of condos being built there too. It's like everywhere you look, Vinnie, I agree. Condos are being built, and that is going to diminish the rate of return on those investments.
And food for thought too, right? Remember, guys, that basically there's a 10-year rule in California where you can sue the developer, right? So if they build an apartment complex and they do condo conversions, right, it's going to help out with that lawsuit that comes about any kind of new development. If you bought a property that's basically 7 years old, get ready for letters in the mail from all of these attorneys saying, hey, what's wrong with this place? Because they're going to get a lawsuit, go after the attorney. It's just, it's actually probably one of the good times to actually buy if you have cash to buy when there's a lawsuit happening. Right. In that
I'm going to tell you, like, it's this sounds so cliche, but it is location and it is land, Vinnie. I agree with you. Those people who buy houses right now are going to be heavily rewarded because look around. Where do you see them building new single family residences? The only spot you see this is Chula Vista. Chula Vista is one of the few areas where they're actually still building communities that are single family homes. Everywhere else is condo, 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 condo. So it's like if you want to invest in yourself, once again, personal opinion, nothing against condos. Vinnie does a lot of condo deals. I do a lot of condo deals. It's a great way to get in the market and build wealth. But if you really want to sacrifice and have a better rate of return, buy the single family house with the largest yard you can get, suck it up, buttercup, buy the house, and you'll be rewarded later. Because if condos are everywhere, there's still families that are going to want to live in houses and have a barbecue in their backyard and have their kid do a jumpy in their backyard and have a kid have a place in their backyard and want to have privacy. So
if you're in your early 20s, and I've like this, I wish I was this smart, right? When I was in my early 20s, but if you're
me too,
20s,
I wish I was. Right? I was a complete idiot in my early 20s.
Find a way to buy a house and rent out the rooms. At least for a couple of years. Live in the garage.
Buy units. Buy 3-4 units.
Well, if you can afford it. If you're a veteran or something like that, you can basically buy. It's going to probably be more affordable to probably buy basically a single family home, 3-bedroom, 2-bath, like that, and just rent out 2 of the rooms. Keep the great room, the primary room, and then rent out the other rooms. So it's just food for thought. I know we really talk about the back screen stuff of kind of the pricing and what's kind of going on with interest rates. But if you have any particular questions, reach out to myself or David. Here's the tickers, just switch there fast. There's our numbers. Give us a call. We're here to help. We try to do this sometimes weekly, sometimes monthly, whenever it truly kind of pops up. But we're here to help.
We both have YouTube channels. If you want to check us out on YouTube, we'd love to. I mean, the videos on YouTube for me and Vinnie, they make Mr. Beast look silly. So everyone should go and look us up right now. If you want better videos than Mr. Beast on YouTube, check out Vinnie's channel and my channel.
Bold.